As I mentioned in the chat, I wanted to do a little bit more of a full strategy breakdown today because I've made some recent changes to my entries. My overall strategy is still the same, just some changes to my entries. I've found these past few months to be challenging, just the way the markets have been essentially since Trump took over and really since the tariff wars started. It's a very headline-driven market. And I was having some trouble with my previous entry style where sometimes it was hard for me to find good risk reward trades on low volatility days. And then on other times it was just, I couldn't get in where I wanted to and I would miss big moves. And so, the markets change and you have to adapt and adjust. And so I wanted to review that. I also know we have a lot of new members right now who may not be as familiar with how I'm drawing my key levels, what those levels represent, and kind of the big picture of things. So what you're seeing right now is really mainly what I look at during the day. Pretty simple. I have another monitor that has another chart on it, but that's really just for execution. My NinjaTrader platform is over there. But all my markups are done on TradingView here on a single monitor with just two panes. I have a higher time frame on the left over here, and then the lower time frame on the right over here. And we'll go over what the time frames are as we kind of get into the strategy. I have a few markups here. So this is my actual chart from today, but I'm going to go to a clean chart and we're going to break things down. And then I'll kind of come back to this and show you where we are at. And some of this change also came out of, it should be mentioned, my 10-year-old son has been interested in learning about the markets a little bit. And as I was teaching him, I found that a lot of the concepts with like looking for the specific patterns and stuff, like it didn't make sense to him as a child. And I was like, okay, well, how can I have a child understand what's going on with the markets? And I really had to like simplify things down. And then it started to click for him. And then I was like, man, like we should all be thinking about the markets in this sort of a simple kind of way. So let me just go over a little bit of that first. So, as we all know, the markets move up, they move down, they move sideways. I don't need to go into higher highs, higher lows, all that kind of nonsense, right? But ultimately, what we want to do is kind of take a look at the big picture and get a sense of, is the market going up? If it is, then I kind of am more interested in being a buyer for the most part, with some exceptions. Obviously, if it's going down, I'm interested in being a seller. If it's sideways, I might be interested in both. And once we're doing that, what we want to start to think is like, okay, I want to be a buyer, but where would I like to buy from, right? So if I'm looking at this like investing in real estate, right? I don't want to buy a property at the highest point. I want to try to find a cheap property that I can invest in, right? Like just really, really simple. I was explaining it to my son as if he was looking at like Pokemon cards. And so once we have that idea of the big picture, okay, this is going up, I want to be a buyer. What we can start to do is say, where might I want to be a buyer from? And, so if my time frame looks, like a standard trend, something like this, okay? Once it's pushing up, I would say if the market was in here, I'd say where might I want to be a buyer from? Well, this previous area that at one point was too high, at a certain point, the market pushed through that. So this area became not high enough, or in other terms, too low. And so what I want to maybe do is say, well, if this was too high and now it's too low, then maybe that would be a good area to be a buyer from, right? Really that simple. And if something like this happens where it blows right through this, well, this was the next sort of established area where the market said, hey, this is too low and still kind of overall in an uptrend. So this general area is where I may want to be a buyer from, right? Really, really straightforward. I mean, that's the cornerstone of support and resistance. So then from there, all we're really doing is saying, as price comes into those areas, on this higher time frame, as price is retracing on its way down to this point where I may be interested in being a buyer, on the lower time frame, that's generally going to be a downtrend. And so right now on this time frame, do I want to be a buyer yet? No, it's trending down. So all I want to do is wait for some sign that this trend is coming to an end, maybe some kind of bottoming, and then I can start to say, okay, now maybe I'm starting to get a sense that I may want to be a buyer. Again, where might I want to be a buyer from? And I'm going to go into more detail about this, but hey, if I was to get in somewhere around here, where we just had this spike through that reversed super fast. Like this was definitely too low. This seemed to be a good support area. Maybe if I can get a buy here, this gives me a good point to put my stop where this was a strong rejection, a definite too low point, and then maybe I can ride this thing back up to this most recent high here and get some good R multiples on that. That's it in a nutshell, right? That's really, really simple. But I'm going to show you that obviously on the actual charts because they're never as clean, and you'll get a little bit of a better sense. I'll show you the trades kind of from today and what that looked like. So this is the ES continuous contract chart, and I'm going to go through my key levels, how I draw them and why. And then we're going to kind of whittle down into the lower time frames and look at actual entries. So let's talk key levels. I think for intraday trading, like I do look at weekly and dailies, but most of my setups, like my actual trade idea, because I'm trading on like a 1 or a 2 or sometimes a 3 minute chart. So my actual setups are like a 15 minute, 30 minute hourly type chart. And then my high time frame at that point becomes like a 4 hour. So really like those three time frames are pretty sufficient. So that's where I'm going to kind of stick with for today. So we're going to start on the H4, the 4 hour chart. So all I want to do is look at the recent price action. Now this was a big push down. So we'll kind of get to that, but let's go to some like cleaner price action, like back here. Okay. So imagine this is where we are like right now. Okay, so when I open the market, like even if we were like here, I'd be looking at this 4 hour chart and I'd just be looking for the most recent support and resistance in there. And almost any time I get like a flip of the candles, like this candle turned bearish and closed bearish, that's going to be indication that there's some resistance there. So the way I draw my levels, right, if I was looking at it like this, and I think it's really important to color code your levels, by the way. So this whole cluster, this whole sideways consolidation on the 4 hour, we had this sort of extreme point up here. Okay, I like to make these extreme points a dotted line. So you can see, like, if we were just looking at this consolidation, this was the highest that it went, and then we kind of chopped around. But this was an extreme point. There was a lot of other rejection in here. If you were to look at this on a lower time frame, you're going to see that this came up and down and up and down and then way up and down and then here and down and then here, right? And then down and then finally started to break out rather. So my key level, I call it, the key level, what I'm going to do is of all this upper rejection stuff, what's the lowest wick? And it's right there. And my only real thing here is I don't want this wick to cut through too many bodies. Now, if I have two, like, look at these bodies right here, okay, where they're just kind of like standing alone up here like an island, I treat this the same as a wick. So I don't mind for a line to cut through that. Like if I had another wick over here and I were to draw a key level like that, that would be okay with me. However, if you look at this area, right? Let's say I had a, whoops, let's say I had a wick like right here. I'm not going to draw this line where it cuts through these four bodies. Like that's too much, but I would draw it, for instance, to this wick, even if it cut through these two bodies. Or for instance, here, my key level would be on this wick. And you can see I'm okay with it cutting through these two bodies because this is a quick rejection. If you were to bump this up even to maybe instead of a 4 hour, a 5 hour, that might just be a wick, right? Same deal over here. You can see this level hits these wicks. It cuts through these two bodies kind of, but I'm okay with that because I treat this quick rejection the same as a wick. You know, this one would be drawn at that point in time here. So it would cut through these two bodies. So I hope you get the sense of that. So the solid line I call my key level. So here it catches all of these wicks. I want to catch as many of the wicks as possible without cutting through more than two consecutive bodies. And then I have my extreme. And then on the lower portion of this, I do the same thing. So I'm going to have my key level here. So this is the highest wick of all of these wicks of this consolidation. And then I can just tap this over with my arrow key. And then where's the extreme point here? The extreme is just this wick here, and I make that a dotted line. So this becomes the range that we have, but we know that we might get a lot of rejections around this level. The range isn't really thoroughly broken until it gets outside of the extreme point. Same thing down here, okay? And we're going to go through this on each of the time frames, so it'll get clearer and clearer. So here, this is what this would look like. Notice once it broke through and cleared and really started to close, one candle, two candles above the key level, we did retest that key level and push. And also once we got above this extreme point, we also retested the extreme almost to the tick and then pushed up. So both of these levels can be significant. They can both be tradable. Sometimes the market does not respond at all to one of them, but does respond to another one. A lot of times the market will push through one, react to the other, come back through and retest, and you get all kinds of interactions around these points. If I'm trading the range, like if I go to a lower time frame, I'd be looking for, let's say I was trading this as a sideways range, I'd be looking for short entries, kind of somewhere in this area, because this was sort of like where all the rejection happened back into the range. Okay. All right. So that being said, this is just, price action was a little cleaner here, so it was easier to to draw out. The recent price action is a little bit crazy. This point in time here is also interesting. So let's say I was at this day on the 4 hour. This would be key level of this high. This would be the extreme, because remember, once we had the bearish candle close, that's resistance, right? On the lower time frame, that's going to be a swing point. And so this becomes a dotted line because it's my extreme. Down here, this is interesting because we have some options here. There is some discretion. I could draw my key level down here. Let's just do the extreme because I have that open. I also could choose to choose here as a key level. And this, again, there's always some choices to make here. But I could also do in here, it's okay that it cuts through those bodies, right? I might look at that as the range. And sometimes what I'll do to give myself a better idea of that is I'll bump down, right? So let's go look at that on an hourly and kind of go like, well, what makes sense on the hourly? What really looks like it's a sensible place to put it. Um, this is still like a kind of sloppy area to me. I'm pretty content with sort of where that is. Only thing I see in here is you can see that we have like wick, wick, and these three wicks over here. So what I might do is see, what if I put it on that highest of those three, cut this across, kind of catches that whole range. What does that now look like on the H4? It's kind of up in that area. So maybe that's the one that I choose. Maybe that's how I decide to draw that. Okay. Sometimes you're going to be right. Sometimes you're going to be wrong. You got to do the best you can do. And like I said, there's always going to be some discretion. So this is where I drew them from. And yeah, that looks pretty good to me. I actually do think I'm going to move it like to there. I think it makes more sense on this time frame to just do it, to anchor it to that wick and then draw it across, because we did have this push up. Then everything else was sort of inside of this push except for this quick flush down, and then this held again. So I like that. So that would give me my range there. Again, notice once we closed, got clear above, the area that we retested on this one was not necessarily the extreme. The better entry was closer to this key area in here, right? This area around the 63.73 on ES. Okay. So that's on the 4 hour. And then it's just the same thing for the other time frames. And we're going to go through that, but with the more recent price action, getting us to today's trade opportunities. I'll just do one more. So, well, we'll leave these. And so it'll be the same thing here. We got this sort of resistance here. The extreme is pretty close here. So it's just like a little couple ticks above, nothing to really worry about too much there. And then I have a choice here. Do I go here? Do I go here? Do I go here? I think I kind of just like down here. I don't want to make my ranges too narrow. So sometimes that's a consideration. Remember, we want to trade at the more extreme areas where price is, more out of balance. So I kind of like that a little bit better. And again, you can see how once we started holding this area, we started to get those pushes right? So that's what I am looking at for key levels. All right, let's now go to the recent price action and we'll see how we marked up the charts today. So remember, this isn't much of consolidation, but it is some consolidation, okay? So here, what I'm going to do is I'm going to say, all right, this is my most recent sort of high. Zoom in on this, H4, boom, boom. I'm going to use this wick here for the low. Notice it also kind of catches that body, boom. And then, especially on this lower side, I do need to mark this as the extreme. Because if I'm looking for like a break and retest, that retest might just bounce off this wick. It might come up to this larger consolidation area. So on each end of the range, on each end of the swing, I have two levels, right? I don't expect price getting back up here, but up here it would be this one as the key level. So again, the lowest wick of this turn. And then the extreme is more straightforward. It's just the actual extreme, right? That's that swing high down here. I look at this whole thing as consolidation, this whole little double bottom kind of area. And I'd probably look at this level here as the key level. It's the highest wick of this whole consolidation. And then, of course, the extreme is way down here like that. Okay. This is probably more would come up on a daily level, the way that this is shaped up, which would be a different color for me and would help me to kind of organize all this in my mind, right? And so we'll see when we look at this on a daily, you can see came down, we had the bullish candle flip, right? And so on here, I would actually probably do this more like this, but then I might refine it when I go down to the 4 hour. And then this was the lowest wick before it pushed back up and then broke down again. And this would actually be a daily high in here as well. Something like that, actually. And in that case, I may not need the 4 hour swings. So that's what that would look like. Actually, this would be a daily level and the daily extreme. And then as we kind of swung and broke down, we've got these smaller consolidations. Okay. And one thing you'll notice about the way I do my levels is notice when I look at my daily, the 4 hours don't show up. I find that really helpful, and that's very easy to do. When you're setting up your levels, you draw the line, you make it the color you want, you click on it, and then you go to this more, these three dots, and you go visibility on intervals and go current interval and below. So I want my higher time frame levels to show up on my lower time frame charts. I don't want all the lower time frame levels showing up on my higher time frame charts because it gets really cluttered when you're zoomed out like that. You just have levels everywhere and it gets super messy. And then once you've got everything set up, you just click here, save drawing template as, and label it whatever the heck you want to label it. Okay. And so, yeah, and then I would go down to like a M30 or an H1. And when I say or, I'll kind of get into that in a minute. But when I was going into the market this morning, we had this 4 hour consolidation area. Then the market pushed down. And what I might do here is start to make some adjustments. Okay. So this I might kind of change and have it more down here because this is sort of where we really broke out from. You can see we consolidated and then broke down. So I'm going to make that like that a little bit. I like that better. And then we start to look down here. Okay. So this consolidation's a little bit messy, but we can see we had this push up and then start to roll over and push down. I might want to say, well, what does this look like on an hourly? Okay, that's a little bit cleaner. It's a little bit cleaner. So what I might do is say, well, what if I popped a level here? Oh, H1. So that's going to be black. And what does that look like on that 30-minute? That looks like that. That's not so bad. What does it look like on a 15? Essentially, what I like to do is I like to just say like what time frame is giving me a clear picture of what's currently happening in the market. When I look at this, I kind of say, I kind of like this as like an hourly consolidation. And then within this hourly consolidation, we might have something a little bit smaller as well. But I would say we have something like that, right, as our most recent consolidation. And Go there for the hourly. I've got my extreme points. Got my extreme points. All right. So we've got that. So we've got this kind of main consolidation. All right. So now when I'm looking at this market, okay, going into the cash open, we were already pushing down from NFP news. And what I see is we have this, lower high, lower low, lower high, lower low. And what I want to look at is, again, I want to be a seller, right? So my hourly time frame, it's clearly moving down. Where might I want to be a seller from? Well, like I mentioned, if it's doing something like this, right? And that's where we are. This area in here is area number one. This area in here is area number two. And honestly, anything in between is also fine with me. But it's sort of like extra confluence if we're right at one of those levels. And sometimes we don't make it to the levels, and that's fine too. Kind of show you what I look for and what I do there. But this is what I'm basically looking at. And as you can see today, price came into the extreme, pierced it a little bit, rejected, and came on down. So this is kind of the kind of thing I'm looking at for my setup. Now today, for me, this hourly chart is the most clean. Some days, like yesterday, the M15, right? This was yesterday. I took shorts here and was looking at shorts here, but I had a meeting started, so I couldn't actually execute it. But you can see how we had this low point. We broke, we retested. We had this low point. We broke, we retested. Super, super simple. As soon as we start getting near here, my eyes are open for looking how am I going to get involved? And same thing, as soon as we get here, how am I going to get involved? Yesterday, the way the market was moving, the 15-minute is where I saw those opportunities. Now, in the pre-market, it was more of this 30-minute was cleaner to look at. But once the market got going during the cash session, it's moving faster. So I have to go to a faster time frame, right? That's what the time frames are. It's the speed of the market. Today, in here, the market was moving slower, awaiting news. So the pattern showed up clear on the H1. And then we got into the cash session and it moved pretty fast. Then we go down to our 1 minute. Now, what am I looking for my entry? What I've noticed, I used to wait for, a different sort of confirmation, enter at a market order or a stop order. And I was finding a hard time getting good risk reward. So lately I've been entering more passively on limit orders. And here's what I look for. So generally, if the market is moving up, right, and this would be this retracement up. So it's an uptrend on the 1 minute, but we know that that's just a retracement of the downtrend on the H1 or the M30 or the M15. But if it's moving up, oftentimes what you get is some preliminary signs of sellers coming in. You might get a strong rejection that maybe has some increased volume down here. And then you'll get a second test, which often probes above this and hits down even harder. And what I'm looking for here is a momentum shift. I want this move down or this move down to be faster than the moves up. So if this move up took 3 candles and this move down only took 1 to kind of break this structure or even get close to this structure, then that means momentum is increasing to the downside. And then ideally what I see is either strong volume at these rejection points or strong volume as it's pushing. And ideally, one of these first 2 pushes breaks a structure point. And then usually it looks something like this, and I'll show you what this looks like in like real trades in a moment. I'll show you the trades from yesterday and from today. What I look at is the same thing I was talking about before, right? Where, for instance, this would be my extreme point, and this would be the sort of key level, right? So I'll make this dotted. And knowing that, what I do is I set a limit order right inside of the key level, a stop over the extreme, expecting price to come back up and retest somewhere in this area. Often it gets this like really close. Like I get some really clean entries here. and then pushes down, and I'm looking to make a new low. So over here, it would be, looking to retest this area. But sometimes, depending on price action, or if there's if there's a weekly level down here or a daily level, I might get cautious and want to be a little bit more conservative about that entry and take it. For instance, I might look at this as a potential reversal where some preliminary support came in, a bigger rejection, and then we finally pushed up, and this might come and retest somewhere in this area. And so I may just want to target, if I was doing this, I may just want to target in here. Okay. And I'll show you how this looks in just a second. So let me clear some of this off, and we'll see this on the charts. So we'll do today first, and then we'll go to yesterday. I think yesterday was cleaner, to be honest. So today, ES did not get close enough to this key level. I want it usually to get closer. And often if it doesn't, what I would look for is for this to already put in one top, like already show some support. And this would be like a single candle wick on like a 15-minute or a 30-minute, which you'll see in a moment. And then I look for the next time it comes up, breaks above this, kind of takes out any stops that are above here, and then that next one. So because I don't have a key level, this kind of gives me an area to trade off of on the next swing. Otherwise, I'm kind of in no man's land. But if I'm feeling confident enough about momentum, I'll take it, which is what I did today. So here, let's look at this price action right here. Now, I took this trade actually on NQ. I'll show that in a second too, but since I have the markups on this chart. So what I want you to notice is, actually, let me make this volume a little bit bigger. Look at this abnormal volume here. This is relatively strong volume compared to the recent action of the last like 20 or so bars here, right? We had some strong volume down here as we were pushing up, but once we got moving up, kind of leveled off, and then all of a sudden, bam, and it has an upper wick. So that's my first cue. That's where I first start to go, okay, we might have some preliminary resistance being put in, okay? So that becomes already where I'm thinking might be that initial key level area. Okay. Then we get up above and pretty strong rejection, pretty decent momentum, but not too convincing yet. And then we try one more time and make that double top. And then now notice this shift in momentum. This took 2 candles to get there. This moved further in 1 candle and broke that little bit of support there. So once we see that, what we can do is put a limit order inside of that level, a stop over the extreme. Now on this, I was looking at this on ES and I had a daily level somewhere in here at around 3.5R. So if I executed this on ES, that was about where I'd be looking to get out. And let me tell you what I've been doing, and I've back tested this and it's what's worked well for me. I don't think it's necessarily the best mathematically or profit-wise, but it's really been helping me because with these entries, I'm getting some much bigger R multiple opportunities, and my struggle always has been over managing my trades. So what I started doing was taking half of my trade off at 1-to-1 and using that as a proxy for going break even. So rather than move my stop to break even and then have the risk of getting taken out of a perfectly good trade, because where I'm positioned here is a very comfortable positioning and price might come up and test this again. But if this is truly the extreme, then that should be okay. So rather than moving my stop to break even, if I take half the position off at 1-to-1, which is usually a pretty easy target the way I'm positioned here, even if I leave my stop where it is and it comes back and takes out the second half at that full stop, I'm break even on the whole position. And if I move my stop, once this got going, if I move it to here, now even if this gets taken out at a small loss on the second half, I'm profitable on the whole position. But usually what I do, once I get to that 1-to-1, I'm pretty relaxed and I don't move my stop too aggressively. So this was the entry here. We had our preliminary support. Notice the increase of volume. Then we tried to get above it, rejected once, rejected again with increased momentum and breaking some of the support that came here. And then we just say, okay, now I want to be a seller on the higher time frame. I'm not quite at an area where I want to be a seller from, so it's not ideal. This isn't an A plus for me because of that. There's a chance that this still comes higher, but it's also showing signs on the 1 minute that the sellers are taking over, and I kind of want to be a seller on the 1 minute now. Also, where do I want to be a seller from? Well, it would have been great if I had sold up here. That would have been awesome. So let me put a limit in because if I can get filled there, then that's great. And then ideally, you take this down for a new low. And like yesterday, I had some really big R multiple potential trades. Even this one, if you were to take this for a new low, that's a 9R, but it didn't notice it stalled out around here, right? Around this, what could be considered preliminary support on a higher time frame. But we're still overall bearish on the hourly. And so let's look at what happened here, where we did finally come in and test that extreme level. And this one's a little bit different, but again, let's look at the volume for clues. Look at the volume here, all of a sudden increases. That is this candle right here. When we started to get these wicks here, we started to see some increased volume. Okay, so that's our first clue. So I'm going to draw a little line there. Then we got above, rejected, tried to hold it, came through, broke all this structure, put our limit again inside that area. Now this really was playing out on a higher time frame. This was more like a 3-minute setup. You could get out at this swing low here for a 3.7R, or you could take it all the way down to new lows. It was something like 9R or something. Like it was on NASDAQ, I think it was like a 9R. And I'll show you what this looks like on the M3. It's a little bit clearer, but you don't see that preliminary support on the M3. And so you may end up missing that trade if you're only looking at it on this time frame. But it's the same idea, where you get this rejection, rejection. And usually, even if you don't see that, if you see this shift of momentum and the break of structure, if it gives you a double top, the entry is usually going to be just under the neckline. So let's say that I was on this time frame, I would probably have drawn this key level something like here. Again, just looking at all the wicks, this is the highest wick on the M3. And so the entry just would have been slightly lower once this candle closed, put the limit in, stop still above the extreme, because that's where we've identified as this looks like this is where the market went too high. And it's still a 4R down to the lows. It's still a 3R down to this local low here if you want to be conservative, and still very easy, like very easy to get that 1-to-1. Very, very easy there. And I'll show you just really quickly. This is on NASDAQ where I have those trades already marked up. This is the way they both looked on NQ today. This is the one I took. Didn't quite get to the key level, but it was closer on NASDAQ, and that's why I chose to execute it here. This was our initial preliminary support here. And so this was kind of where we had that key level. So notice my entry was just under the key level. I got wicked in on this bullish candle, initially pushed down, got my 1-to-1 really quickly here. So I'm already now, right? That was 1-to-1. So by the time this started pushing back up, I'm not really worried. And notice if I would have gone break even when price was at 1-to-1, I would have gotten stopped out at break even. But I didn't. I kept my stop where it was because I took off half, which means even if I get taken out, I'm still break even on the trade as a whole. And then I was able to ride this thing down, but I had to leave my house. I was trying to take this, I was looking at this down to this swing low area. And then I was like, you know what, let me make it a clean 4R multiple, just to be conservative. It was also right around the 85 level. And it just started stalling out and I had to leave. So I closed it somewhere in this little consolidation here for just shy of 4R. It was something like 3.5 or 3.3, 3.4, something like that. Okay. So that's the way that looked. And then this setup here, same deal. Okay. You actually also have this little area here of where you have this support. So this is a little bit cleaner, I think, on NASDAQ. You have this earlier preliminary support, but you get that same little bump in volume here. It's just not as dramatic. This was more dramatic back here. This was just about 15 minutes before the one on ES, which was within these candles here. And then we came up, rejected, not really a shift of momentum yet, notice. Notice here we start seeing that shift of momentum and the break of structure. And then I have a key level, and you might have entered lower. You might have had the level down here. That's okay. But I didn't enter this trade. I was at lunch, by the way. This was not, or sorry, I was still in the meeting. And then I went out to lunch. I marked it up while I was at lunch. But then this sold off really quickly. But notice how easy this was. And you would have very quickly got the 1-to-1 R multiple. So let's just really quickly look at yesterday's trades, and then we'll call it a day here. So yesterday was the same deal, right? Except we actually did have, this was like a 15-minute extreme right here. And so again, it was, whoops, it was the same kind of thing. We came up into that swing area. So just to kind of point out what this is, if you look at this on the M15, swing low, high, push down. This was our extreme. Okay, I'll mark off the other one on here anyhow, just so we have it. Boom. And this first one on oh, this one I can tell you what happened here as well. So notice here it didn't hit on NQ. It did on ES. So this was yeah, ES was here. So this was interesting, and I mentioned this in the chat. I executed this trade here, the short from this area. This was at 9:45. I executed on NQ, even though NQ was not at the key level, but ES was. But I liked the entry cleaner on NQ. So I'll show you. That was this area in here, which was, sorry, I got to get to it. Here. So NQ was not at the key level, but I just liked this entry better. So again, we had this preliminary support, not so much of a bump in volume, but what I liked better on NQ was this rejection was a little bit cleaner than it was on ES. It broke this low. And so because ES was at the key level, I felt pretty confident with this. My entry was once this low happened, I put in my limit. I got filled here. Notice on that first push down, I got my 1-to-1 got filled. So even though this pushed back up again, just like today's trade, this pushed back up again, but I was already out of half my position at 1-to-1. So I didn't move my stop yet. And I let this thing ride down. And my target was down here at these lows at, again, about 4R. And I was just looking at these wicks here, and I just kind of wanted to be like somewhere inside of that. And that's the way that trade worked out really, really nicely. So it's the same thing. First little resistance, second test that rejected very strong. Notice full bullish engulfing candle, and it broke structure, and the momentum was increased. So 2 candles to make this distance, 2 candles to make a greater distance. That means it's faster. It moved the same distance in less time, or I'm sorry, greater distance in the same amount of time. That means it was faster. That means more momentum. And then you're able to take the execution. And then we had this swing low here later in the day. Notice we come up. What do? This is another example of the double top. But we have that initial preliminary resistance here. Okay. Again, not huge volume increase on this candle, little bit of increased volume, but nothing major. Then we got the first test, second test. Notice this was a really nice rejection. Both of these were engulfing. We made that double top, and then we had this big increase in momentum to the downside. And when we see this again, you can get your order underneath the neckline of that double top, right? So your order can be there. This would have been a harder one to grab here on NQ. There is a chance you put your order here and you don't get filled, and that's okay. That's going to happen sometimes. That's the downside of this type of strategy is sometimes you're right about the move, but you don't get filled. You don't get the price that you're shooting for. That's okay. Because if I wait for this lower high and then I get in something like here, look how much lower my entry is. And this was a day where we had really big swings, but lately there's been so many days where the swings aren't that big. And if you wait for an entry down here, the R multiple on the trade is squashed. Like it's just not even worth taking at that point. This second trade, I think, was better on ES. Let me show you this one on ES. So this one is in here. Let me drop a marker on here so it's easier to find. Where's the little marker tool? We'll just use this. So this was right here. And I guess I don't need to because I'm already on the 1 minute. But in case I need to change time frames. Okay, so we have, a daily level here. The white is a daily level, plus we have our extreme. So we got well within that range. Probably also would have had like the actual key level somewhere in here as well. I don't have this currently marked up for yesterday's levels. I delete my levels. And then we have kind of the same thing, but this one was a little bit easier to get in on. So you have this first rejection, then price comes up, and you get this inverted hammer, this really strong, like where price goes, no, 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 we're not. We tried to get higher, it's not working. Another attempt, not working. And it's this big change in momentum to the downside. And it did break this little bit of structure. So here, you very easily could have put your entry anything under there for a really tight entry. A very easy 1-to-1 because you get 1-to-1 still inside of this consolidation, this distribution range. And then again, you take this down to new lows, which we also have a daily key level that can act as a target down there. And that is a 17 R multiple trade. Even if you want to be conservative and get out where we had this little consolidation here, that is still a 12 R multiple trade. That is very easy to hold. And the other option here is you wait for this shift, this bigger sort of, this might play out more on a 2 minute or a 3 minute, and you're just taking a smaller position with a wider stop, where again, you look at this as the preliminary resistance, this as your sort of double, triple top type situation. You get in under that neckline, right? So this here, again, not really any volume clues here, which is fine. Doesn't always, the volume is not a necessary factor. It just sometimes gives you added confluence or gives you a clue. Sometimes I'll actually, you notice I have this red line in my volume. Sometimes I actually set an alert on this line. That's why that's there. So I'll say, hey, I want to step away, but if we get a bump, if volume bumps up higher than it's been recently, like I want a ping on my phone. I want to know that volume just increased. But this is the same thing. And then, you set a limit order somewhere underneath this range. This would be a smaller position size. And then you take this down, and there's still plenty of meat on this bone. Even if we take a conservative target here, this is still a 4R multiple trade. It's only a 4-point stop. This is still a very tight stop. 4 points on ES is not a lot. You could take it all the way down for a new low or all the way down to the daily key level, and we have a 7R multiple trade. So the overall analysis, same as it's always been. Overall methodology, same as it's always been. I'm just entering on a limit order, looking for a slightly different confirmation on my entry, because I'll tell you what's happened a lot is, like let's just go back in time a little bit to, um, so this is Wednesday, right? Was this FOMC? No. Was it? No. Well, regardless, we've had a lot of days where it's just chop. It's just chop and slop. And if we can get these little, like there's not really a spike down here, but if you can start to anticipate, oh no, this was FOMC. Yeah, it was just chopping around all day. So like this was most of the day, right? And even in here, so here we go. Alert, volume crossing horizontal line on ES because it's the close. It's getting close to the close, right? Even on here where we start to say, okay, we've got this range that we're trading in, right? Here's the market open. We've got the range we're trading in. We've got our overall support, and the market makes an extreme. And obviously, this never came up and really tagged it, but can I get in on this range? And if we did get an entry there, there's still, you can get 2R pretty easily, even in a tight range like this. So this was FOMC. I don't trade over, like the price action is always shitty on the morning leading up to FOMC. So like I'm not surprised there wasn't really an entry here, but that would be the idea if I was looking for an entry. Or you could look at something down here at the lows where you might say, you've got support here, you've got your extreme, we kind of came up and broke structure. These are sloppy examples, so like don't take this with a grain of salt, but I'm just trying to make a point that even on these narrow range days, we have opportunities for entries where we can still get reasonable R multiples. And on something like this, I might say, hey, 1.58 is not worth it. I need to get it lower, and I just set my limit wherever I need it to be to make that trade worth taking. And if I don't get a fill, I don't get a fill, but I'm only going to take it if it's worth me taking. So that's it. I hope that's helpful. Essentially, like in a nutshell, my higher time frame, I'm looking for those key areas where price might react. I'm generally looking at like one time frame up from my entry time frame, and I just base that on where does the market look cleanest. Some days it's the 15, some days it's the 30, some days it's the 1 hour. Rarely is it higher than that. Some day, like actually today, if I remember correctly, actually today, that little consolidation range we were in, I just want to show you this because I thought that the 45-minute was actually the cleanest here when I was looking at this range, this pre-market range. I thought the 45-minute gave me the clearest picture of what that range looked like on both NQ and ES. See how the 45 minutes just kind of nice and clean, whereas like the 15-minute, the 30 were really kind of messy. So I just find whatever time frame makes it the cleanest looking, where I can get an idea of what price is doing. And same thing, most of the time I'm on a 1 minute for my entries, but sometimes the 1 minute, like price is just moving slow that day and it's sloppy and hard to read, and I'll bump up to a 2 minute or a 3 minute. I'll just bump around and try to find what time frame and what that when I look at it, is it clean and clear? I just want it to be clean and clear. And that changes. The market speed, the market rhythm changes. And so I'm not married to any specific time frame. But entries are usually 1, 2, or 3 minute, most frequently one, sometimes even up to a five. And then the setups. So like if I'm looking for a break and a retest in a trend, that's going to be the trend is going to be usually on the 15-minute, the 30-minute, the 1 hour. On some days, it's actually a 5 minute, and then I'm entering on a 1 minute. On some days, it's a 2 hour. Again, it can really vary. And then 4 hour and above are just what's overall the market doing, but also if the daily is pulling back and we're pulling into a daily key level, I might want to be either, maybe cautious about taking a short into that level or start to be open if I start to see a sideways range develop, even if that 30-minute or 15 is bearish, but it's bearish. And let's say that that bearish 30-minute trend is actually just a retracement of a bullish 4 hour trend. And I see that that 30-minute trend is coming into a 4 hour area of resistance. And then I also see that that 30-minute trend is starting to transition into a range where normally in all our situations, I would play the range, but only on the short side of it. But if we're at that 4 hour key area and the 4 hour is bullish, then I may be interested in playing the bottom of that range and taking longs. And then I would go down to the 1 minute and then look for, the 1 minute trending down into the lower portion of that 30-minute range. I'd look for the buyers to start to come in and push some pressure. I'd look for that momentum shift, that structure shift, and I'd say, where do I want to get in this thing? Where's a good place where I can get in, where my stop is beyond the extreme, where I can get really good R multiple, and then I just wait for my fill. And if I miss it, I miss it, but I usually get filled more often than not. And my win rate on this in my back testing was about 70%. And most of my target twos are actually, in the 3 to 4 R range. And I probably mathematically would be best off just taking my full position there. But again, I'm not used to taking those big R multiples. Usually I get out at like a 1 to 2. So I'm using that half off at break even as a proxy. I'm sorry, half off at 1R as a proxy for break even to make me more relaxed about trying to catch those full moves. Because days like yesterday, where there's potential for 12R, like I want to catch some of those. And I want to be more relaxed about trailing my stop. So that's why I've been taking half off at break even. It's more of a psychological strategy than it is a mathematical or profit-based strategy. The way these have been hitting, I'm pretty confident that my realized R multiple would be much higher if I just took the full position at the overall targets. Um, they often hit. You're targeting inside the range and they often hit and good R multiples there. So I hope that's helpful. Let me know in the chat and Discord if you have any questions, and I'll see you guys on Monday.